The US economy is flashing warning signs again. The yield curves have inverted, tech layoffs are piling up, and inflation refuses to cool down, and the national debt has reached historic highs. The big question is, could America be heading towards another Great Depression, or is this just another slowdown that the economy will eventually recover from? And even more importantly, how will this affect you, whether you live in the US, India, or anywhere else in the world? Welcome back to Insight Equity. Here we simplify complex financial news and break it down into clear insights that you can actually use. In this video, we will look at the warning signs in the US economy, whether another recession or even a Great Depression is on the horizon, how today's situation compares with history, and what all of this means for the global economy and countries like India. So let's dive straight into the numbers and see if the fear of massive crash is justified. First, let's talk about the warning signals in the economy. The yield curve has inverted, and that's a big deal. Normally, long-term bonds pay higher interest than the short-term ones, but right now, the opposite is happening. And historically, almost every US recession since 1950s was preceded by the exact signal. It's basically the bond market screaming that a slowdown is on the way. Next, unemployment is creeping up, especially in the tech and the finance. Big names like Google, Amazon, Meta, and even Wall Street banks have been cutting thousands of jobs, and layoffs are usually one of the earliest signs that companies are preparing for tough times. Household savings are also falling. During COVID, Americans saved more than ever, but today, savings are back down to the levels we last saw in the mid 2000s. And when savings are low and debt is high, households become much more vulnerable if the economy turns south. Now, speaking about the debt, US consumer debt has hit an all time high. Credit card balances alone have crossed $1.5 trillion. Add auto loans and student loans on top, and people are relying heavily on borrowed money just to maintain their lifestyles. And just for the reference, you can also compare it with the 2008 recession, where the borrowers for housing loans defaulted and it started into the recession. And finally, talking about the inflation, while it has cooled from 9% peaks we saw earlier, it's still stubbornly above the Federal Reserve's 2% target. Meanwhile, interest rates are sitting at multi-decade highs. That means business borrow less, consumers spend less, and naturally, economy slows down. Now the big question is, could this be another Great Depression? Back in 1930s, unemployment in America hit nearly 25% and stock market collapsed by almost 90%. That period scared an entire generation. If we compare today's situation, there are definitely some similarities. That are rising debt levels, bubbles in certain sectors, and weak consumer confidence. But there are also important differences. Today, central banks have powerful tools like quantitative easing and global liquidity support, which simply didn't exist in the 1930s. Technology-driven industries make economies far more flexible, and social safety nets, such as unemployment benefits, provide at least some cushion for the families. So while a full-blown depression seems unlikely, the risk of deep and painful recession that's very real. So, is the US already sliding into a recession? The International Monetary Fund has warned that global growth is slowing to under 3%, with America facing what it calls significant downside risks. Even the Federal Reserve has admitted that keeping interest rates this high could increase the risk of recession. The cracks are already visible. Real estate is struggling as mortgage rates make homes unaffordable for millions. The tech sector is shrinking with layoffs, and now with the policies of H1B, it will gonna be worsened and nothing else, and declining ad revenues. And small businesses, the backbone of the US economy, are being squeezed hard by higher borrowing cost. Leading indicators like manufacturing orders and business confidence surveys are pointing towards. Meanwhile, lagging indicators such as GDP still looks okay on paper. But history tells us when these two don't match, a recession often follows. And let's not forget, when America sneezes, the world catches a cold. If the US goes into recession, global trade slows down because Americans buy fewer goods that hurts exporters everywhere. Emerging markets like India feel the heat too. Demand for IT services, textiles, and other exports falls. Even remittances from Indian working in the US could slow down. Investors also tend to pull money out of riskier markets when the US economy weakens. That means currencies like the Indian rupee may depreciate, making imports more expensive. And then there's oil. A US slowdown usually pushes oil prices lower, which might benefit importers like India, but it creates instability for oil producing countries and can still lead to unpredictable ripple effects. So whether you are in America, India, or anywhere else, in a US recession will directly or indirectly affect your job market, your investments, and even the cost of living. So, should you be worried right now? If you are an investor, the answer is to stay calm but smart. Diversify your portfolio, reduce exposure to risky assets, and avoid piling on debt. If you are a working professional, this is the time to upskill, build multiple sources of income, and create a financial buffer. An emergency fund with at least 6 months of expenses can give you a peace of mind if things turn rough. For India as a country, the outlook is better than in past crises. Our foreign exchange reserves are strong. Domestic demand is holding up, and inflation is more under control than many other nations. But of course, no economy is completely immune to US recession. So, what do you think? Will the next US recession be worse than the Great Depression? Or will it just be another temporary slowdown? Share your thoughts in the comments. I would love to hear your perspective as well. And if you found this breakdown helpful, don't forget to hit like, subscribe, and share this video. That way, we can continue bringing you clear and actionable insights every week.